Today's September 4th, 2011, looking at a chart of the S&P 500 and starting off with a 20-year monthly chart. So this last candle just closed a few days ago. You can see that we had quite a drop in the markets. Came back all the way to the 200-month moving average and saw some buying off of that back into the near-term range that we had before. So, looking at that, it seems like there is quite a bit of selling interest in the market. So you can see we fell below these long wicks here, which were considered extremes at that point in time. But now you can see that the market sentiment has shifted considerably on a monthly chart. Going back to a 5-year weekly chart, you can see prices kind of coming in and testing the 200-week moving average. Saw some buying after that, but after this week, I'm having my doubts. So if we go and take off these studies and start drawing in some lines, we can kind of see that, we had this trend line, which was followed for, since our 09 lows, we've pretty much been following that all the way up, and it was broken very cleanly about a month or so ago. And since then, we've seen, just consolidation on the bottom portion of this range here. Also, if we go ahead and drop in some support levels, we can see that, this is going to be an interesting one right here. You can see we have resistance here, function as support, and so if prices do continue to collapse, then we can expect to see some sort of support develop in this area. Also, there's going to be some resistance right here, and you can see the market kind of broke through it. We were above it for a while, and as we came down, there wasn't any buying interest at that level, and now we can see some selling interest on the back test now. Also, we can drop in some Fibonacci retracements going from lows to highs. If the market does continue to collapse, we can look for this area right here to function as support. We have some confluence with this horizontal level and also 50% retracement. And also for the most recent leg down, seems like this would be the area where price would reverse and continue the downtrend. So kind of making the case here for another leg down, we have this inverted hammer forming. And it's also forming at the top of the range or the expensive price. We have this prior swing point here, and it's functioning resistance, and then you can see price came up and just tagged the halfway back retracement and sold off from there. So, from my viewpoint, I think that we will see further downside continuation next week, and this level between 1050 and 1000 is a very realistic target going forward. A couple stocks I'm going to look at next week is GDX, very clean breakout here. If we can get a back test of this now support level, I would like to get long and put a stop below the previous week's low. It looks like a very bullish setup to me. Again, if we use this range right here, looking from a 52 half to 64 half, we can say there's about 12 points upside, and the risk would be about 61 here. So we're looking at about $5 or $4 of risk, $12 of upside, giving us a very nice risk to reward ratio. Another stock I'm looking at for a short is BID. You can kind of see here that we have a similar setup. Price came into halfway back, and we saw some buying interest, but again, it didn't hold up. So we have this head and shoulders pattern here. Right, we have the left shoulder here. We have the head here, and the right shoulder here. This blue line is a measured move going from the high to the low, and if we project that, we'll come down into this green area here, so we have some support. So this should be a nice short with a stop right above the high here, and looking for these downside targets. And the other one that I'm currently in, APKT, and I'm short on this one. Similar looking setup, a little weaker than the rest of them. Looking for a push down. If we actually go to a 2-year daily chart, kind of point out the targets I'm looking at on the downside move. So essentially looking for this 35 level or so as a profit target for this. And also if we remove this Fibonacci and go from all-time lows to all-time highs, kind of get a better idea where these levels line up at 34.61.8. So somewhere in this area I would expect to see some renewed buying interest. And finally, going back to the Euro-US dollar, looking at that from a weekly standpoint to start off with, we have these couple key levels, horizontal support resistance levels. You can see price has kind of been pushing back and forth in this area, so it hasn't been very clear. But if we look at a weekly, or rather a monthly chart, you can see we do have these longer wicks on the downside. So every time price does push down, the buyers are pushing it back up, and that's reflected better on also the weekly as well. You can see there's a hammer candle here. So to some extent, it looks like a push up, then a bull flag and continuation higher. Now, the only criteria here is it has to hold, again, this trend line here. So I would imagine that in the near term, we're seeing quite a bit of bearish action. You can see this last weekly candle here is outside, bearish engulfing. So if we do push down till here, maybe like the 140 half area, and the price does not hold, then I would say, okay, well, this is in trouble, and we're going to see a continued move to the downside. But if it does hold up, then I would imagine that we do kind of push back into this level. There's some resistance here at the 78% retracement, and that would be about 151, 152 area. So that's my analysis for the broad markets for the most part. We can take a quick look at gold, look at GLD. This thing continues to push higher. Not sure where it's going exactly, because again, we are at all-time highs and the buying pressure is still there. This is quite an exponential move. There's plenty of people who try to short this and they're getting run over. So it's best just to play the other stocks. And again, if the market does collapse, gold is going to be a safety, and so is the dollar. So if we see both of those things come into play, then gold's only headed in one direction, and that's higher. So even though these levels seem pretty expensive, in a few weeks from now, if those things do play out, this might be just a pullback to get in. So this is one that I'm trying to stay out of. I'm just kind of watching this one, and the rest of them I'm taking actively watching and trading. So that's pretty much my analysis, and thanks for watching.